Hey everyone, welcome back to the channel. So it seems that Elon Musk is terminating the deal with Twitter, so he's not buying it, but yet this is probably going to go to court. So I want to show you some things, also talk about what Twitter might be worth, and I think these things will be interesting for you. Also too, if you're new here, my name is Chris, a professor for about 10 years, and this is to help you navigate and grow. So let's take a look at this. So Twitter deal may be off. Musk is saying Twitter is a material breach. This is over basically bots. Musk is basically trying to make the case that Twitter has way too many spam bots on there, and then give me the data, and then Twitter gives them the data, and then Musk is trying to say, no, you didn't really give me the data. I want the real data, and then no, we did give you the data, et cetera. So that's kind of the general gist of it is, but he's just trying to get out of the deal. I mean, to be really frank. One of the things that's really interesting about the deal, though, is this is not isolated situation with Mr. Musk. He's also being sued over Dogecoin being a pyramid scheme, and I think we put these things together, and it's something that I just always like to say, play stupid games, win stupid prizes. It's kind of like that. He tweets out a bunch of Dogecoin stuff. Dogecoin goes up, right? You're dealing with people's money. It's the same with Twitter. You're tweeting out and you're finding that, hey, I'm going to buy Twitter as a joke for 54.20. Yeah, it's funny, but you put this stuff out there and you're going to buy it. So, people are going to hold you to your word, and essentially, which is really interesting, part of the provisions in the deal is if either party walks away, you have to pay $1 billion to the other party. So, $1 billion here, $1 billion there, that starts to add up. It's a lot of money, you guys know that. But this is the kind of money that we're dealing with, and obviously Elon does care about $1 billion, so that's why he's into this thing. The other thing too, there's another provision which is really interesting, that is Twitter is going to try to essentially force Elon to make this deal. So we'll see. I think it goes to Delaware court, and Delaware is not too kind to these kind of things. Now, is Twitter even worth messing with? Is it something that we're interested in? Okay, so the last year it's down 46%. It has a PE ratio of 152. That is very, very high. And it's got a dividend yield of no yields, right? So this is not generally a stock I'm interested in. One thing I will say, it is real. Twitter is a real company. They have people there, and Twitter is like kind of popular, right? People love to talk about the news and who tweeted what, he tweeted what, she tweeted what, that kind of stuff. So we do talk about it. It is a real company. One of the things that's facing Twitter right now is how to monetize this thing. What other services they have? They've started like what's the word to say, like live chat room kind of things, and I don't know how popular those are with people. It's a competitive space. You have YouTube, right? You guys are on this platform right now. People can do TikTok, Facebook, Snapchat, other kind of things. So you're in a competitive realm. The other thing too to think about is what does the robots say. So let's take a look through some of this stuff. And the robots is actually really funny. You click valuation, and I was scrolling down here, and the robots were like fair value of 81. I was like, what? So I would completely disagree with this one. Also too, you got to look at more than one thing. But I do show you the numbers. So this is giving you fair value 81. So I don't think it's worth this much, to be fairly frank. The reason why I'd say that is when I click on future here, this is sort of their growth rate is like, say, 17 around, and it could even be less than that, but I'm just showing you guys different numbers. And when you compare like a growth of 17 and you have like, say, P ratio of 152, which is right there, or you go over here, I know I jump around a lot, but I'm just showing you guys where I get these numbers. Forward PE of 21, it's not so attractive. So basically what you're looking for is if your PE is say 21 in this situation, you want your growth rate to be above that. So I'd want like growth rate of say 30 to justify that. If my growth is in the 17 range, and my P is 21, it's not a great buy. Now these are all estimates, so anything can happen in the future. So like here, for example, I'm laughing because here you have negative growth, which is not so great. This is on your earnings estimates. And then you have flat, then you have 26, and then you have negative again projected. So projecting the future is always tough, and this is just giving you basic guidelines. You also want to read through earned reports of companies. So my understanding with Twitter is that they're in a competitive space and they're having difficulty monetizing. Like what is their business model to make money? Like right now, I use Twitter for free, and basically it's like an ad model, right? But going forward, that may not be a great model. So they might have to go some sort of subscription model or something like that to get people to, buy into this thing. Also, too, when we're taking a look at this stuff, look at the health of the company. We got a health score 4 out of 6. This is just looking at different indicators that we like to look at. And in particular, I mean, I'll show you some more stuff, but I like to check their debt to equity. Just do they have a lot of debt, especially in this environment? Generally speaking, if you can, you want companies with no debt, right? That would be ideal. But if they do have debt, you want to make sure that they have cash flow. They have money coming in. The same way that you carry a mortgage. Yes, you'd like to pay off your mortgage, but you have a good enough job to where you can meet your financial obligations monthly. So, in terms of their debt to equity ratio, though, you can see their debt is 5.2 billion, and then cash and short term 6.3. So they actually could just take all their cash and pay off their debt. They could. So it's not awful, but not great. You can see here their debt coverage is not well covered by their cash flow. And in fact, we're going to take a look at some numbers there as well. So let me, let's see, it should be here. Yeah, so let's do this. Let's look at their financials here. And you can actually learn quite a lot of stuff from this stuff by looking at numbers. Generally speaking, when you're looking at these things, for me personally, I just want to see what are the trends are of a company and any anomalies or strange things. So one thing that stood out to me about with Twitter, and you can actually find these in companies, and then I'll start showing you guys this data because it's kind of fun to look at this stuff. Their employees are going up, so they are actually hiring people. The last you can see right here, I guess 9 years. My understanding is they're on a hiring freeze right now, but many companies are. However, I think they overhired, and that's a problem. You guys can see this. So they went from like 5,500 employees to 7,500 in about a year. So they're hiring 2,000 employees, and this is like from 2020 to 2021. So I'm not sure why they were hiring during the pandemic. I guess were we using Twitter more during the pandemic? Maybe it's possible. And then maybe they were really confident about that. I don't know. I was thinking about that because I know, like for example, in the crypto space, people are like, "Hey, everyone's gonna buy crypto forever. Let's hire more people because it's a boom." I don't know. I was just like, why are they hiring more people? So I'd love to hear you guys' response to that one if you have an answer for that. It kind of stood out to me as being odd. Also, too, their cash flow situation. So here, this is their net income, right? So they were losing 2021, 2020. This is actually $1 billion they were losing, or not losing, but their net income was down here, I should say. Because someone did point out, which is true. So sometimes a company isn't necessarily losing money. They could be reinvesting the money. That's completely true. So I just wanted to throw that out there. But looking through these things, the things that sort of stood out to me, there's a couple. So one is their free cash flow per share is negative, which is not so great. Actually, it's not good. And to give you a sense, you can see the trend here, right? Okay, whoops. Actually, there's a line. I want arrow, not line. There we go. Give me my arrow. There's my arrow. So this is free cash flow per share. So we were at 92 cents, $1.13, and then we started going in the wrong direction. This is just the last couple of years. And I want to give you guys some frame of reference so you can say, okay, what are we talking about free cash flow per share? Now remember, free cash flow is basically you got money coming in and money going out, what's left over. That's essentially basically what it is. And let's compare it to Meta, because I think they're in the same category. And you'll get a good sense of like, okay, how do you compare that? What's going on here? And if you look at Meta or Facebook, here I want to talk about it. Look at this cash level. So free cash flow per share on Meta, $6, $5, $7, $8, $13, $14, $30, right? It's going up. And in fact, they got quite a bit over there per share, $14 a share, which is a lot. But obviously, it depends on which space or companies are in. Let's see, what's another Snapchat. Let's check them, because these are all comparable companies, and I can do a side-by-side comparison of these ones as well. We'll do that in a second. But I'm just looking at free cash flow per share. So Snapchat's in a little bit better shape. Now this is just one indicator. There's a lot of different things you can look at. You can see here it was negative, and then this hit positive recently. And now that we're talking about, let's do the Twitter thing comparison. So let me just pull this up. Give me 1 second. Okay, comparison. Let's do Twitter. And I do these live, as you guys can see. So I'm just looking at stuff and comparing numbers. We'll see, what's another one? We could do Meta, Twitter, Snapchat. Oops, so we'll put Twitter first. Facebook, what other social media companies are out there? I can't think of any right offhand. If you guys think of any, please type in the comments, which I should have met or should have put in there. TikTok is not yet public. But this gives you a general sense of like how to compare Twitter to say Snapchat or Facebook Meta, right? So the first thing that jumps out is Twitter only has 7,500 employees compared to Meta's is 77,000. So Twitter's really, really small compared to Facebook essentially. And then Snapchat has about 5,000 employees. In terms of what Wall Street thinks compared to three, they say Snapchat's a buy, Meta's a buy, and Twitter is a hold. Other things that, just quick glance at comparison. You could argue both Twitter and Snapchat are not in great value, right? F's for valuation, but Twitter is growing, whereas Facebook is not, right? So companies are different. It's fun to look at this stuff because you can see the differences, like what you're getting. Other things too. Let's see if there's anything other thing worth mentioning. Price to free cash flow here, you can see the differences. So you want lower is better, and this is a good way to compare companies on a metric like this. You could also look at forward price to free cash flow, which meaning like, remember, see the TTM, trailing 12 months, that's the past. You could also look at the future, but just give you a general sense. So basically, this number just tells you that Meta has a lot more cash. This is the cash flow per share. This is the price of the stock in relationship to the cash flow, right? So lower number is better, and I mean, this is a much better shape. Now, I guess we could look at Twitter's forward, but it's probably going to be pretty similar as their forward PE. So, because their forward PE was 21, but that's an estimate, and I'm not so keen on Twitter's growth going forward, because in this space, this is, talking with you guys, ad revenues are questionable for social media stocks. The other thing too, which I want to take a look at as well, is what does Wall Street think? So, we already saw it before on the rating. There was all holds, and you can actually see who's saying holds, and it's like everybody's saying hold. So this isn't normal, where like Wall Street's consensus hold. It's like not a buy, not a sell. Just hold it. It might be because of the Musk thing, where people are like, well, if he does it, it's worth it. The other thing that was interesting is this is the Dan Ives guy. If you know who he is mega bull on all tech stocks. So for him to say hold on Twitter is a bad sign. He literally is like, actually, we can check. I'll just show you this guy. He's like, dude, buy everything. So, dude, buy Rivian. Dude, buy Tesla. Dude, buy Apple, Lyft, Uber. I guess he doesn't like DocuSign, and he's just a hold on AI. But generally speaking, he's the bulliest of the bulls when it comes to these things. So when he's like kind of down on Twitter, it doesn't bode well for Twitter, in my opinion. So you can look at other Wall Street projections on this thing. My understanding is, like I said, Twitter is not growing, and the Twitter board should have just taken the deal and taken the money and ran. If Musk was offering $54.20, but it got dragged out for whatever reason. And now we're going to go to court, and the loser pays $1 billion, or in this case, the loser could end up buying the company. So anyway, that's my thoughts on Twitter. I'd love to hear if you think Twitter has a future, and if Twitter is the thing. The other thing, I guess, the last thing I'll mention before we go is, people like Elon like to say, oh, no, Chris, you don't understand. This is all about free speech, free speech, free speech. And my response is always the same. Yes, you can believe that, but Elon Musk does business in China and never mentions a word about free speech in China. And why? Because he cares a lot about money. So, so don't just think it's all only about free speech on Twitter. I think it's a little bit disingenuous, because if you did believe in that, then you wouldn't keep your mouth shut on what's happening in China. And that's real. Also too, I do appreciate your time and love to hear your thoughts, and catch you next video.